Hey everybody, this is Greg Gossett with Gossett Trading and Mentoring Live, and today is September 5th, 2019, and we are now again in the final hour of the market. Um, as I mentioned, every day I am primarily an end of day trader, and the reason why is I feel that the prices as close as you can get them to the close of the market are the most valid prices of the day. The prices intraday are mainly controlled by algorithms and day traders, and towards the end of the day, near the close, in the final hour, the large institutions and the large financial institutions and the market makers take over the pricing and move it in what my opinion is the most valid of the prices of the day. And therefore, those are the prices I primarily like to make my buying and selling decisions from. So, all right, let me just make sure we're coming through loud and clear. I think we are. Hey, John, how you doing? John says you called it TLT and gold. Well, you know, it had some bearish characteristics to it with those double and triple tops with the bearish divergences. I mean, could have gone either way, obviously, but big picture, it did look a little bearish. And a lot of the times, big picture doesn't mean anything, but then when you get some kind of trigger, like we did with the announcements of the trade talks next month, that's kind of, I guess I'm saying sometimes those things are self-fulfilling prophecy. Like it looks bearish, everyone sees it bearish, but they're waiting for some kind of trigger, and that was the trigger. And yes, it was a reason for people to get out of their longs. So yeah, so we'll be looking at TLT and gold for sure. So good to see you, John. Thank you for coming today. Appreciate it. It's good to see you, sir. All right. Well, we are having a big day today. Dow is up 420 points. It's up 1.6%. The NASDAQ is up 141 points, up 1.78%. And the S&P is up 41 points, up 1.4%. So we are having a big day today. I'm glad to announce we're having a nice profitable day over here at the Greg House for sure. So we had some good positions. Most of them are going our way, so I'm very grateful for that. So I'm always grateful when we have a nice profitable day, because sometimes they're hard to come by. I do want to point out that we are having a big day. you know People's emotions are heightened and feeling good, but be careful. Don't go chasing positions. Don't get caught up in the euphoria of it all. I mean, we've seen these big ups and down days before, right? The big ups can turn into the downs and so forth and so on. So, always try to keep a level head. If you have a decent setup and it's legitimate setup, well, go ahead and take it, right? But if don't chase stuff just because you get caught up in the euphoria. So we'll talk about that as we go through each chart here. So, all right. So, hey, Brian's here. Hey, buddy. Good to see you. Damn, I got so lucky my teacher ain't here today. Oh, good. Brian's our little 17-year-old protege that's interested in learning about finance. So glad to see you here, my friend. Proud of you for coming and watching this and learning at such a young age. So good for you. Good for you. So, all right. So listen, the format for today, as normal, first of all, we're going to go ahead. We're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to go through all my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward, either to the upside or the downside. And then we're going to do a few minutes on trader psychology. I mention this each day, but listen, everybody. The difference between whether or not you're going to be a long-term successful investor or trader comes down to your psychology and how you deal with emotions, how you deal with fear, greed, frustration, right? In this game, you have to keep a level head. You have to be slow and steady, slow and steady, slow and steady. And it's important in trading that you take the long view. Just like with long-term investing, you need to take the long view with trading if that's what you choose to do. You can't put too much of your capital at risk at any one time because you have a feeling or you see a great setup. You have to stay in this for the long game. Let your edge play out. And in my opinion, the best way to do that is with proper conservative position size. Even if everything goes against you, if you use good, proper position size, you're not going to get beat up too much. You're going to be able to stay in the game. You're going to be able to hang around enough until you have that next upswing, right? And then after that, we're going to take a look at all the stocks in my watch list. We're going to take a look at all the support and resistance levels, technical indicators, RSI, MACD, moving averages, and we're going to see if we can find some type of setup that hopefully gives us an edge. And it's important to look for combinations of signals, combinations of indicators lining up, because whenever I see an indicator, a moving average, something like, or any kind of indicator like that, I look at it as a potential group of buyers. And so if I can get several, 2, 3, maybe even 4 indicators lining up at the same time, to me, in the way that I think about trading, I look at that as 4 new groups of buyers coming in. And if you want something to go up, you want to be in the company of other buyers, right? Just makes sense. And then if we find something, we'll go through, we'll mark a few, and then we'll narrow it down, and we'll see if we can pick the best 1 or 2 potentials to enter today. And then after that, we'll place the trade if there is anything at the end of the day. After the market closes, if you have any questions whatsoever, please let me know. If I wasn't clear on something I discussed during the podcast, let me know. If you'd like me to take a look at any possible stocks that you're interested in, I'm happy to give you my humble opinion. If you're having some kind of trading challenge, and you feel comfortable sharing it, go ahead, type it in the chat, and we'll talk about it, and we'll see if we can maybe find a solution, work something out, and hopefully help you that way. So that is the plan for today. All right, so stand by. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. So hang tight, please. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Thanks for holding through that with me. So let me take a look here. Hey, JT, good to see you, JT. JT says, nice move on the SPY. Yes, we've had 2 really nice back-to-back days on the SPY. So yes, grateful for that. Anthony, hey, how you doing? Hey, Greg, I'm back. Thank you again. Oh, you're welcome. That was a nice post. Thank you on Twitter. I appreciate that. Hey, Steve Burns. Hey, buddy. How you doing? Good to see you, Steve. Always an honor to have you here. I'm always excited when you're here. Makes me bring my A game, which I try to bring every day, but when you're here, I have to be extra A gamey. He says, hey, Greg, risk off metals, risk on equities. Yes, sir. It's a big day today for sure. Hey, in the psychology section today, I'm doing it on one of your posts on your website. So if you could stick around or just listen, that'd be great. So glad to see you. Thank you. Hey, Shelton Johnson, good to see you. Thanks for saying hi. I appreciate it. All right. Well, let's get started and see what's happening here. So, all right. I did buy Amazon back here on the 26th of August. I bought it at 1765.77. I bought it because the previous day we closed under the 200. Next day, on the day that I bought it with the close over the 200. This is a good back tested, profitable long-term approach to trading Amazon. You can trade it discretionarily or you can trade it mechanically. If you traded it mechanically, you would just wait. You would wait till it went from under over. You would just hold it, and you just hold that baby until it eventually closed back under the 200-day. And then, you know, what you're hoping is that you know, it's going to have a big upward move, and, you know, maybe it closes under the 200-day somewhere over here like this. I use this mechanical entry signal on stocks as my entry signal, but then I take over and make it a discretionary trade from there, because, you know, if you're trading a mechanical system holding through earnings, you have the risk of really losing a lot of money through earnings. Of course, you have the opportunity to make a lot upside, but I always look at the risk first. So it has moved up nicely. I have been phasing each time we've had a little move, like here. Took a few here, took some here. I think I hit one there yesterday, and then I have hit 2 profit targets today. So at the moment, I am out of about 60% of my position because I've been phasing out. So we did get above the 50 RSI today, which is very good. That's really great, actually. My ultimate profit target up here is the 50R, or the 50-day moving average. Doesn't mean I'm just going to hold it unless it goes down or goes back up. I'm still going to manage this. At this point, if we lost the 50-day, I would get out. If we had a close below the previous day's low, I would get out. I mean, this has been a really nice, profitable trade. So, you know, I got to tighten up my stops here. If we eventually get up to here, I'll just run out of shares and I'll be out of the trade. But this has been a really nice trade so far. I mean, from entry to currently where it's at, about 4%. Now, I haven't made 4% because I phased out at lower amounts, and that's one of the drawbacks, right? But of course, if it goes up and then comes back down, you're glad you phased out. So it kind of works itself out. So again, going forward, if we get a close below the previous day's low, I will get out. If we get a close below the 50 RSI, I will get out and just go ahead and lock in the profits. But glad that we're able to lock in 2 profit targets up here today. All right, next up is the DDM. Now, I just talked about Amazon closing under, then closing back over. I took the same entry on DDM because the previous day it closed back over. Then we bought it here on the 26th of August at 45.75. Now this, because it's an ETF and doesn't have individual stock with, it's not an individual stock with earnings, this is a completely mechanical trade. So as it moves up, I take profits. I think I hit 1 profit target there. Sure, I hit one there. Not sure if I hit one there. Hit 1 yesterday, hit 2 today. You can see here's my 3rd one, didn't quite get up there. So on DDM, I am out of about 55% of my position. So I've locked it in here, higher prices. If it comes all the way back down under the 200, that would be unfortunate, but I've locked a lot of profits up in here and the market can't take that away from me. So going forward, if it continues to move up, I will just continue to phase out until I'm literally out of shares, or if it just went straight down and closed under the 200-day tomorrow, I would go ahead and get out of that. And you know, I like to have discretionary and mechanical trades. I think it helps smooth out your equity trade, your equity curve, because, you know, sometimes you'll get into a move and then you'll have a big reaction like this. And if you're discretionarily trading it, you'll just get out. And then if it goes back up, you can't really get back in. And sometimes this works really well, but sometimes it does this. So I kind of like to play both sides, have some trades mechanical, some trades discretionary. And sometimes you're going to wish you were all mechanical and sometimes you're going to wish you're all discretionary. But, you know, it's just an approach that I use to help smooth out the equity curve. So this is doing really nice today, 2 profit targets. And again, I'll phase out till I'm out of shares. If it keeps going up, if it closes back below the 200, that will be my area to get out. All right, so here is Philip Morris. This has been my stinker of the day. I mean, it's down. It's not down too much. I did buy it back here on the 3rd of September when we had this under 30, over 30, and we had this nice V1. Here is day one. Day two washed out the low of day one and then closed back above. That was my entry. It's just kind of been, it went up a little bit. Haven't hit any profit targets on this. We entered at 72.72. It's at 72.47. So it's, it's a very slight loss at this point. There's two ways I could approach this as far as my stop. One, this is the washout bar of the V1. So usually a close below halfway of this could be an option, or the other option could be a close back under 30 RSI. I don't really like how it's reacting, but it still is holding halfway of this washout bar. So technically it's still okay. It looks like it's losing the third ATR channel, so that's not great. But as it is right here, right this second, I'll probably just go ahead and hold it. This is only a half position because I was under the 200 day. So most likely I will get out if we have a close below the halfway of this V1 washout bar. So we'll see what happens. Didn't like the 5-day moving average. It's been a long time since it closed above the 5 days. So getting and closing above the 5-day would be a good start for this. But as it is right now, it's very close to a break-even trade. I'm just going to go ahead and hold it and have a little diversification out of tech and everything else. Tobaccos are out of favor right now, but I'm still going to keep this unless it closes below $72. All right, so the Qs. I did buy the Qs yesterday at the close of the market when we had the 520 EMA cross. That is a valid, back-tested, long-term profitable approach to trading the QQQs. This is a completely mechanical trade for me. So I entered when the 5 EMA crossed over the 20 EMA on a closing basis. I entered here yesterday at 183.30. And again, completely mechanical, right? Total robot trade. So I'm just going to stay in this trade, phase out to the upside as long as the 5 stays over the 20. If the 5 crosses back below the 20 EMA, that will be my signal to get out. But we did hit 2 profit targets today. So again, the market can never take these away, right? So if the 5 does go and close back below the 20, at least I phased out of about 20% of the trade already at higher levels. So I lock that in. And then if we go down, of course, then I only have 80% of my position left, so it helps mitigate the loss. So this is a very color by numbers trade. As long as the 5 stays over the 20, I will continue to phase out. On the way up, if the 5 closes back below the 20, I'll go ahead and just exit the trade. All right, the famous SPY trade. So I did enter the SPY here at the close of the market yesterday at 294.05, it looks like. And I exited first thing this morning on the gap up at 296.80. So really great trade, right? Just overnight. I bought it here, sold it here. So I do this every day, and you may ask yourself, why do you do that? You didn't say anything about technicals or anything, and that's true. But this is based on a back test from Lizanne Saunders at Bespoke Invest on Twitter. But you have 2 options with this approach. The first option is you can buy the SPY at the open each morning. So buy in the morning, you could sell it at the close in the afternoon each day. If you did this every day, buy at the open, sell at the close, buy at the open, sell at the close. If you did this every day since 1993, you'd have actually returned a negative 13.9%. But the opposite of that, and this is what I do every day, I buy the SPY at the close and I sell it first thing the next morning. So every day, buy at the close, sell in the morning, buy at the close, sell in the morning. Now, if you would have done this since 1993, you would have actually returned 634.2% compared to a negative 13.9% doing it the opposite way. So this shows a very clear edge in this approach. over time in the long run. You can see in the long run, it certainly has worked well. There are times, there are months and years where you have a drawdown. So if you would have just started with this approach right here, you would have thought it was the worst approach ever. And if you would have used too much position size, lost too much money, you would have stopped doing it probably right about the time that it turned back around. So again, that's why it's so important to position size so that you can stay in this game for the long term and let the edge play out for you in the long term, right? So again, I did buy this here at 294.05 yesterday at the close, and I sold it this morning 296.80, regardless of technicals, regardless of anything else. And you see the day before we bought like at 290 and sold at 293. So we've had a really, really good move with this. And I've been using this since February 26th. It's been quite profitable. Just about 11% on the annualized return basis so far are what my results have been since I've been using it. So I will buy again today at the end of the market and sell it first thing in the morning. All right, our last position is XLF, and this is another mechanical trade. So we have a few mechanical trades now. We have DDM, we have QQQs, and we have XLF, right? So no discretion, completely mechanical. I'm going to stay in. Well, I bought this here on the 28th of August. The previous bar closed below the 200. Next day, on the day that I bought it, it closed above the 200. I bought it at 26.41. If the next day it would have closed back below the 200, I would have immediately gotten out, taken my loss, been okay with it, taken a small loss. But if it did go our way, like it has gone our way, I'm going to be patient. I'm going to stay in it just as long as it closes above the 200 and phase out. But I phased out here and here. Can't remember if I phased there. I did hit a profit target there yesterday for sure. And you can see I hit 3 profit targets today. So currently I'm out of about 60% of this trade, all at profitable levels. So if tomorrow it comes crashing down here and closes below the 200, well, that's unfortunate. But like I said, the market can't take away the phase outs that I have gotten up here, and it would drastically reduce the mitigate the risk. As a matter of fact, if it closed back below the 200, I think I'd still be profitable on the trade. But so anyway, but that's the plan. As long as it keeps going up, I will just continue to phase until I'm literally out of shares. And if it closes back below under the 200, that will be my signal to get out. Oh, and I do have a put on the SPY. I have a put. I wrote the put down here, 265 for October 4th. So as long as the stock stays above 265 by October 4th, I will be able to keep all the premium. I did get a nice premium for this because the volatility had picked up. Currently, I'm sitting at about 65% of the premium that I've already gotten. So if I get up to the point where I have 80% of the premium, I'm not going to wait a whole month just to get the last 20%, and I'll just go and write and sell another put on something that has a little bit more meat on the bone. So this has worked out nicely as well. So those are the positions. And knock on wood, because we don't know where it's going to close, but I did make a yearly high today in my account. So I'm very, very grateful for that. Sincerely grateful. It's always nice, you know what I mean, because it shows that your methodology works. And you know, we've had a lot of ups and downs in this markets, and I guess the point I want to make is, if you would have got frustrated here and went all in or took huge position sizes, how many days of this could you have taken before you just got out and said, screw it, I'm out? And then when you had a new signal, would you have wanted to get back in? You probably wouldn't have the heart to do it. So, you know, it's all about keeping yourself stable, letting yourself take the next trade if it comes along. But if you just got burned and you got your butt kicked from having too large of a position and holding on too long, you're not going to have it in you. You're just not going to have it in you to take that trade. And honestly, that trade's probably going to be the one that goes. So Please stay stable, position size correctly, keep your emotions under control. Don't get too manic. Don't get too depressive. But what I just said about being able to take the next trade and having the heart to take the next trade is very, very important. And again, the way to do that is through proper position sizing, take the long view on trading so that any, reaction against you, any, downturn against you keeps you in the game and lets you allow you to take the next trades. Hey, Murat, good to see you, buddy. You're having a great day on Twitter, my friend. Congratulations. Congratulations. Glad to see that. I was watching that. I watch that every day for Murat, and I hope I'm rooting it on, and I guess it helped because it went up today. So anyway, listen, as you know, I like to do a little bit on trader psychology every single day. Actually, this is from Steve Burns. Let me just run through this first. This is from Bruce Lee. Knowing is not enough. We must apply. Willing is not enough. We must do. And, when it comes to trading, everybody, I think we all know what we're supposed to do. We're supposed to be patient. We're supposed to position size correctly. We're supposed to take our entries. We're supposed to take our stop losses and get out. But how come so many traders fail? Because they know it, but they don't apply it. They're willing, they want to do well, but they don't do. So, if you want to be successful at this game, you've got to know and be willing, but you have to apply and you have to do. It's so important, everybody. And if it takes you years to do it, that's fine, right? You're going to be way ahead of most people if you can just, apply your rules, stand by your rules, create your trading plan so that it's something you can stick with, that the money fluctuations are not going to affect you too much. And again, that's by proper position sizing. But I really like this. I love Bruce Lee. But knowing is not enough. We must apply. Willing is not enough. We must do. Bruce Lee. And I snagged this from Steve. This is Steve's website, newtraderu.com. It's such a great website. He has a weekly videos newsletter where he analyzes the markets 3 times a week. I never miss it. I watch it every single time. He has some nice trade examples and courses that you can take. I've taken all of these, but I grabbed this picture from one of his posts here, the 10 mental errors that new traders make. And they're all here. We don't have time to go through them all. But do yourself a favor. I'm going to post this link if YouTube will let me here. I'm going to try. Oh, there it went. So there's the link. So go and check out his website. Read this article. Like I said, we don't have time to go through all 10 of these, but they're really, really great. And follow him on Twitter at @SJosephBurns on Twitter, and the name of his site is newtraderu.com. But it's always an honor to have Steve in here. He's such a great trader, an educator, an author, great guy. I've studied under him for a couple years, made a huge difference in my trading. So I just can't say enough good things about Stephen Burns. And, whenever I have a question, that's who I go to is Stephen Burns. But knowing is not enough. We must apply. Willing is not enough. We must do. So Bruce Lee said it. You better do it. All right. Thank you, Bruce Lee. You're welcome, Steve. That was a great saying by Bruce Lee. That was a great saying. All right. So what are we doing? We got to go through our watch list. That's right. All right. Well, let's get to it. See if we have anything today. Like I said, I want everybody to be not get caught up in the emotions of this move. Yes, it's a big move. It seems like it might be a driver of the market in the future. Maybe, possibly, is it all priced in today with this move? I don't know, right? So, let's be careful about taking new positions if they're a little chasey, right? So, all right. So Apple's having a nice day here. Nothing really I can buy. It looks like we're closing above the 1 ATR channel. That's good. We took out a fractal. Here's a high with two lower highs to the left, two lower highs to the right. MACD went positive. This is all good. It's a 58, 59 RSI, but I generally do not want to buy up in this range. I generally don't like to buy above the -1 ATR channel. I mean, this is strong. We did have a gap. There's a chance we could fill the gap, but there's really no signals here. And look, we have this range over here, which most likely will, act as some kind of resistance up here. So if any of you have Apple, and I'm sure a lot of you probably do, I'm really glad it's moving up for you. But as far as an actual trade with a good risk to reward ratio, it doesn't make any sense to me here. Adobe, we've talked about Adobe each day. We have this big sidewards movement, lots of consolidation, building a base, a lot of indecisive buyers, can't get too high, can't get too low, staying and building this base. MACD is positive. Looks like we did go positive here on the MACD today. We're at a 47.95 RSI, so theoretically we probably are going to have some type of resistance at the 50, so I don't like that. Whenever you have prices that move sideways for this long, I can assure you they are going to move strongly and probably trend in one direction or the other. Unfortunately, I don't know what direction that's going to be, and I don't know when it's going to happen. We have earnings on the 17th of September. That will probably be a catalyst in moving this big one way or the other, but for right now, there are really no signals here for me to buy on Adobe. AGQ, well, big down day today, 9%. This is double leverage, so I guess silver's down about 4.5%. We have a V2. Here's day one. Day two washes out day one, and looks like we are closing below day one's close. So, does this mean I'm going to short this? No, it doesn't. I mean, we're holding support here at the third ATR channel. When you look at this, you might think, I should have just shorted that up there. I mean, obviously it was high. I mean, yeah, obviously it was, but you could have thought that here or here or here and just, so you have to be careful when you short, right? There's a lot of things going against you, not so much with like silver, but like with stocks. You have, CEOs of company, you have the Fed, you have the government, everyone wants the stocks to go up. So there's an upward bias drift to stocks. Silver's a little different, but people sold, they took some profits here. But for me to get interested in silver, I'd have to have the 5 EMA cross back below the 20 EMA and then back over again. Or if the prices just got back into the value zone, I might look for some kind of V1, V2 entry, but nothing on silver today. AMD did gap up higher today. It looks like we are lower than the close at this point. We're at a 51.57 RSI. It's really range bound here. We have a 5. I think we have a 5. Yeah, we have a 520 cross, EMA cross today, it looks like, but honestly, I don't know how that back tests. I've never checked that out. So I don't see anything here that I like on AMD. Amazon we have with the close under and close back over 200, and we phased out. So this has been a great trade. Hit 2 profit targets today. Again, a close below the previous day's low, a rejection of the 50 RSI, or even if we move up tomorrow and then come back down and close below the previous day low, that would be my signal to exit everything. If we get up to here, I will run out of shares. So, and by the way, if you go to my YouTube channel in the videos, I have a whole lesson on how I phase out. I get people to ask me how I phase out a lot, and it's kind of hard to explain, but I did a 1 hour presentation on it. So if you're interested in that, it's in the description of this video. So, you know, you might want to take a look at that. So anyway, Amazon's good, going well. Boeing back above the 200-day moving average, which is positive, but we're too close to the third ATR channel. 90% of prices stay under the third ATR channel and over the negative third ATR channel. So they tend to go from here down to here, back to here. So this is a little too high. I don't feel like it gives me a good risk to reward ratio because we're getting it up here. It doesn't mean it can't go up past that. It does, right? Like 10% of the time it does, but I play the odds, and the odds tell me that the risk to reward's not so great. Alibaba is having another nice day. Same with Alibaba though. We are getting kind of close to the third ATR channel, so I just don't think it gives a good risk to reward at this point. Caterpillar, monster day. Look at that. I considered Caterpillar yesterday with this V1, V2. Here's day 1, day 2, day 3, day 2 washes out day 1, day 3 closed above day 1, but I didn't buy it because the V2 happened on a gap. And in this case, it would have been smart if I would have bought it, but I didn't, right? Because I have a filter. If it's too big of a gap, I won't take it. But you can see today, look at that. Right to the third ATR channel. Imagine that. Right? And that's exactly where it got rejected. So, I mean, here, look, it was down below the third ATR channel, and it does happen, but it doesn't happen a lot. So nothing on Caterpillar. DBC's commodity share index, we triggered a fractal yesterday. Here's a high with 2 lower highs to the left, 2 lower highs to the right. I considered buying this yesterday, but it was over the 1 ATR channel. If we can come back down into this range, if we can come down for a day or two, this was a strong move. I think it's going to hold, but right now the risk to reward doesn't make sense to me. So I'm going to see if we can get closer back down to here, and I may enter a position there, but nothing today. DDM we have, of course, we bought with the close under, close back over, and it's moved nicely our way. We did hit 2 profit targets to the upside. I'm going to continue to hold this until I run out of shares, or if it comes all the way back and closes under the 200. So hopefully it won't do that by the time I run out of shares. Disney had a decent V2 yesterday. I didn't buy the V2 because I would have had to have bought right into this downward sloping 1 ATR channel, and I really like to buy inside the ATR channels. You have the easiest movements from here up to the third, from here down to the negative third. So when you start buying up here, I think you're pulling the rubber band a little bit tight. Who knows, it could continue up, but nothing on Disney. Etsy, I am going to buy Etsy at the end of the day. We have this bottom here. You can see how deep the MACD bars are. This is indicating the momentum of the move. We come down, we have a rally. Now we go back down, we make a lower low. See how we're low? We're lower than we were here. But look at the red bar, just a little tiny speck. This is a major divergence. This is called a double bottom with a bullish divergence. I learned this from by studying with Dr. Elder. This is his favorite setup. And all I needed was the trigger. The trigger did come today. We went under 30 RSI at one point today. We're closing, it looks like we're going to close back above the 30 RSI. And on top of that, we have a V1 at least right now. So I will be buying this today at the end of the market, and I will be using possibly, I'll have to see what the RSI levels are, possibly a close below the washout bar or a close back under the 30 RSI. It's under the 200-day, so I will be taking a half position. But again, we have the low, we have a rally, we have a lower low, bullish divergence, big MACD bars here, small MACD bars here, showing a lack of momentum, and we have the trigger of going under and back over. Ford's having a big, nice day. It held above the 200, consolidated a little bit and moved up. This is too high for me to buy. Facebook having a nice day. Again, too high for me to buy up here. 5 below, we had that move up, came down a little bit, and boom. But we're over the third the third ATR channel. It takes a lot of buying to get something over the third ATR channel. So this is very bullish on 5, but it's too high for me. Gold down today. You know, we talked about this. We made a high, we came down, we made another high, we came down, we made another high. We had 3 symmetrical highs called 3 little Indians. I learned this from Linda Rashke, but on top of that, you have a high, higher high, higher high, and momentum is strong, weak, weaker. So does this mean I want to just go ahead and short this here? No, I don't. As a matter of fact, now that we're back in the value zone, if we could get the bars to settle down, move sideways for a while, I might be looking for a V1, V2 entry back up. Or conversely, if the 5-day EMA closes under the 20 EMA and then back over, that would be another long signal. If I were to short this, I would have to have another reaction rally back up that fails, makes a lower high, and that's probably where the easiest leg would come from. But now that you've come back down here, now you're starting to have buyers, right? People are going to buy that first dip. So, and then if it goes up and fails, they'll get out. Shorts will come in. You'll have 2 groups of sellers, and that's probably what will make the easier move down. All right, Google having a big day. I've been waiting to buy Google, but I have to wait for the 10 to cross back over the 30 moving average, simple moving average. That's the signal. And if that comes, we're going to be so far, well, depending where it comes, but you know, if it happened up here, I'm not even sure I would take it at that high. I may take a half position. I'd rather take something right here in the value zone. So I'm not sure, but it doesn't matter because there's no signals there today. We could trigger a fractal, but again, I don't want to take a fractal at this level. Goldman Sachs does have a signal today. It has the 5 crossing over the 20. That's a valid back-tested signal. I don't think I'm going to take that today, though, and the reason why is I already have XLF, which is the financial ETF. So if I add on Goldman Sachs here, I'm just going to be basically having more correlation to financial stocks. And 2, I don't like buying this high. Doesn't mean it can't go up, but the way I look at it is, okay, here's the third ATR channel. You know, that's theoretically probably an area where we're going to find some resistance. And then where would my stop be? You know, by the time the 5 cross under the 20, it could be down here, right? So it doesn't give, for me personally, it doesn't give me a good risk to reward ratio the way I trade. So if any of you have Goldman Sachs or take that 520 crossover, I hope that works out. But just the way I trade, it doesn't make sense for me today, especially having the XLF. If I didn't have the XLF, it would be different, you know, and you could use the low of the gap up day here as a potential stop. Okay, I'm running behind. IBB, nothing on IBB. I need it to go under 30, back over 30. Intel had a big day, gapped over the 30 ATR channel. It's very strong. It doesn't look like it's come well off of its highs. Yes, it's over the 200, but there's really nothing I can do with it. The Russell, I'm considering buying the Russell today. I think it gives me a good risk to reward ratio. It's a 50-69 RSI. Looks like we're closing above the 200. We did take out a fractal today. Here's the high with 2 lower highs to the left, high with 2 lower highs to the right. Took out this fractal over here as well. So I think, you know, it's not too overbought. It's a little bit outside the 1 ATR channel, but not bad. But I do think this gives a good risk to reward. So this is on my possibilities today if it closes over the 200. Johnson & Johnson, nothing there. Coca-Cola, down a little bit today, but it's not surprising. It's a defensive stock. Nothing there. Lockheed Martin, V1 to the downside. Does that mean I'm going to short it? No, but it is, just want to point out that it is a V1 to the downside. Today we washed out yesterday's high and reversed back under, but it looks like we're catching support over at this previous highs, which are now support. MasterCard, great big day today. I can't buy it up here. You can see it did have problems with the third ATR channel, so I would have to wait for a dip. I have to wait for some kind of dip on MasterCard. We did buy MasterCard back here when we had a confluence of signals. We went under the 30, back over the 30. We tagged the 100-day moving average, and you can see this was a really nice trade we had. I scaled out all the way to there and got out. Altria, nothing there. Merck down again today, starting to narrow. If I could get the bars to move sideways and have a V1, V2 the upside, that would be interesting. Let me see where we're at here. All right. Oh, Microsoft. Took out a fractal. It's above the 1 ATR channel. It's a 57 RSI. Again, it's just too high for me here. And keep in mind, you know, I have the cues on the mechanical trades, so you know, always be careful to not get too many of the same industry, not too much correlations. Netflix is kind of interesting here as well, guys. This is a bullish engulfing candle. On top of it, it's a V1. On top of it, we've closed back up into the channel. On top of it, we've had a false breakout to the downside of this range here. We tested back over, tested back over, tested back over. Huge volume today. The only thing I don't like is the 3961 RSI. So, you know, the 50 RSI will be here tomorrow. This is the washout bar halfway, but it does still give me, you know, from here to here, well, from here to here would be my risk. From here to here would be my profit potential. So it's about a 2-to-1 risk to reward ratio. So that is also a possibility for me. Nike, Mount Doji, I think, had Nike. Boy, what a great trade. So I think he bought it here with the close over the 200. So that's been a great trade. Good job, Mount Doji. Philip Morris. So I bought it on the V1, close under 72. I'm going to go ahead and just get out of Philip Morris. So I'll have to watch that. PayPal, nice big day today. It's too high up for me to buy. Our Qs, of course, we bought that with the 520 crossover, hit 2 profit targets today. Snapchat, it's winding up. Inside bar, inside bar. So in my opinion, that's going to move strong one way or the other eventually here, but I don't know which way. So nothing there. The SPY, of course, we had the nice overnight trade. I'm going to buy that at the end of the day. Square, having a big day today, but no signals. SSO, that's double leverage. Bonds, you know, we talked about bonds getting a little weak, you know, having the high and the divergence. Does this mean I would buy bonds here or short bonds here? No, we're back in the value zone. So now I'm looking for sideways movement. I'd more be looking to buy this if we could get a V1, V2. Tesla, V2, day 1, day 2, day 3, day 2, washes out, day 1, day 3, closes above, had this gap. A little high in the channel. It's just a little, it's just right on the bubble of being too high in the channel. So I'm going to let that one go. Murrit, there you go, buddy. Look at Murrit, everybody, with the 4.2% return today on Twitter. Now, we are closing in on that third ATR channel. So, you know, at the very best, we keep going up. Most likely, we move sideways, or maybe that's the top. I don't know. So let us know how you manage Twitter, Murrit, but congratulations on a great trade. UNG, kind of an inside bar today. UNH, inside bar, nothing there. Oil, you know, we've rejected this 200-day several times here. Now it looks like we're under again, so nothing on oil for me. The dollar, big big couple days down. We did bounce right at the open again on the dollar. Now that we're getting close to the value zone again, I'd like to see this move sideways and look for a V1, V2 back up to test this high, but nothing there. VIX, big down day today. Looks like we've lost the 50 RSI. I think on the VIX we are getting close to a 1030 EMA cross under, which is actually a good sign to show that we're going back into a low volatility market. It's not quite there. Verizon moving up, but nothing there. You know, Walmart, this looks a little shorty. I'm not going to short it, but you know, we did open above 70. Now we're closing under. We did open above the third HER channel. Now we're closing under. I wouldn't short it here though, because look, here's the previous resistance. It's now support. So we're probably going to find some support right here, and there'll probably be some dip buyers that come in. If we get another rally that attempts to rally back up and then fails, that will be the short that I will take, if I take it. I'm not sure I will, but I think the train's left. Obviously, if you shorted at the open, it would have worked well, but I think right now you're a little chasey to the downside. So I would look for an attempted rally back up into the halfway mark that fails, and that I might consider, but nothing today. Energy, nothing on energy. Financial select, of course, we have. We hit 3 profit targets today. Real estate, nothing there. Utilities, nothing there. Healthcare, nothing there. And pharmaceuticals, nothing there. So that leaves us with 2 potentials. The Russell, now the Russell doesn't backtest that well with buying under and back over the 200, but we did take out this fractal. We did take out this fractal. MACD is positive, and if we're wrong, we're probably wrong small. So I kind of do like IWM here at the end of the day. And then Netflix. Man, you have this bullish engulfing bar. It's a false breakout to the downside. MACD is positive. You're back in the channel. I do kind of like it. You know, I do kind of like it. I don't like that we've rejected this 10-day though. And but all in all, with the bullish engulfing, the volume, MACD being positive, and the false breakout to the downside, and it would be a half position. So I think I will go ahead and take a half position. And then let's look at the current positions, see if there's anything, if we need to be weeding anything out of here. So Amazon's doing fine. DDM is fine. Philip Morris, I may have to get rid of Philip Morris here if it closes under 72. So it's going to be real close. So I'm going to have to get that one queued up. That's my one stinker of the day. Q's had a great day. SPY will be buying that. Had a great day. We'll be buying that at the end of the day. And then XLF, 3 profit targets. All right, so let me take a look here. Let's look at the weekly on IWM. You know, it looks like we rejected the 50 RSI on the weekly. Strong volume. I think I'm going to let it go. I'm going to let IWM go just for the fact that I have Qs and I have the DDM. So just adding another index. I don't have any exposure really to mid caps here, but you know, we did sell off from the high there too. So I think if I add IWM, I'm just adding too much correlation. So let's let IWM go. And then we'll take a look at Netflix. Autofilled. All right. All right, I do like Netflix. So, but this is only a half position now. So just one position today then, and it's a half position. And then when the market closes, everybody, I will get to your questions and your comments and all that good stuff. But let's take care of business first. So I trade a couple accounts, so I have to queue these up in both accounts. All right, so we're buying the S&P at the end of the day. It does look like I'm going to buy Netflix, half position. I'm going to have to watch Philip Morris. So, all right, I think what I'm going to do, I'm going to go ahead and just buy Netflix right now so I have time to babysit Philip Morris.
Order partially filled.
290.
Order filled.
293.25. $293.25. All right. Okay. All right. So I'm going to have to watch Philip Morris here with a close under 72. Get that queued up. All right. What do we have? We have 2 minutes. So a close under 72, I've got to get out of Philip Morris and just take a loss on that. Won't be too bad. Be about a 72-cent loss on the position. It was a half position in the first place. So we already have our Netflix. So it's hanging right there. We have about 1 minute left. Looks like it might hold. Now it looks like it might not hold. Yeah, it looks like I'm going to have to get out.
Order partially filled. Order filled. Order partially filled.
All right.
Order filled. Order filled.
And that is the market.
Order cancelled.
Wow, big day today. Wonderful, great day today. I think I took out my yearly high by about $100, so it still counts, right? All right. Wow, what a day. So we did get out of Philip Morris with the close under the halfway of the washout bar. So that was our one loser on the day, but that's okay. And then we entered Netflix at 293.25, and that's right where we are. Again, this was a half a position because we were under the 200 day. So, all right. Well, listen, if you have any questions or comments, please type them in the chat. I'm happy to get to them and answer them and clarify anything that you have or look at any stocks. Before I do that, I just want to put in my daily quick plug, let everybody know that I do offer private one-on-one teaching, coaching, and mentoring lessons via Skype. I love to teach. I've had really good success with my clients. And so, if you've been thinking about it, this would be a good time. If you go in the description of this video, I put in a new price format. I'm trying to get away from teaching just 1 hour here and 1 hour there, because I think the best benefit is when you take a longer course from me, the one-on-one course, and it's actually less per hour. So I do have a new pricing structure in there where I teach 5 2-hour sessions with you, and it's one-on-one, it's via Skype, so a total of 10 hours, but 5 2-hour sessions. And that way I can really take you from the beginning to the end. That way it gives us a lot more time to go through charts, have you explain them to me after I teach you, and it helps the price go down from $150 an hour to $100 an hour. So in the past, I've always had the best success with people that I can teach multiple hours to, not just 1 hour here, 1 hour there. So if you've been thinking about it, this is a good time, because all in all, you get a price discount. Also, if you like the channel, please do me a favor. Subscribe if you haven't, and if you haven't hit the thumbs up button today and you found something of value today, please go ahead and hit the thumbs up button. It really does help promote the channel, and the channel is growing. It's nice because I get a lot of emails from people thanking me and saying, Greg, you've kind of turned my mind around as far as how I approach trading, and it really is helping me. I'm getting better results, and that's why I started this channel. So help me help them by sharing the channel if you can on like social media, or hit the thumbs up button at the very least. That would really help. So, and like I said, if you have been thinking about doing some one-on-one lessons with me, this is a really good time with that new program that I'm offering, because it's less per hour and you get more hours too. So you can reach out to me. My email's in the description, and you can also send me a message on Twitter. So, all right, well, that's my plug, and let's go through and see what everybody has to say about this crazy day. Frank says, I've been profitable last few days on EL and OLLI. Well, let's take a look. Estee Lauder, you've had for a couple days. Okay, good. Did you take it back here on this V1? Or I'm not sure where you bought it, but it's moving up. I mean, we're making higher highs. We're not making lower highs or closing below the previous day's low, so that's good. We are getting close to this third ATR channel up here. This might act as a little resistance like it did over here. So, depending, I don't know what your plan is, if this is a long term or just a trade, but keep in mind if you see any bad price action up in this area, Frank. Ollie. Oh, that's what I like about doing this live stream. When you guys give me symbols, like I have no idea what they are. I've never heard of them. So, Ollie's Bargain Outlet. All right, good. Well, yeah, it seems like it's going up for you. We had that big gap down on earnings. Just my personal opinion, when you have these big gap downs, you may have a rally 2, 3, 4 days, but a lot of times that will be it, and it might come back down. So keep that in mind, Frank. Max, hey buddy, how you doing? Good to see you, Max. Max says, what do you think about HQY? So it was trying to, intraday it did have a V2. Here's day one, day two, day three, day two, washed out day one, day three at intraday did look like it was above day one's close, but it looks like it closed under. So technically, it's not a V2, but let me see what the RSI was yesterday. The RSI yesterday was 28.82. So today it did close back above. That by itself is a good signal that it went under and back over. I would have liked it better if we would have also had the V2, but it did go under the 30, back over the third ATR channel, under the 30 RSI, back over today, under the third ATR channel, back over the third ATR channel. So that is good. And also it was a false breakout because here was your previous low. You broke down to a new range and then back up into the old range. So this area right in here is called a false breakout. But all in all, not bad. Cherry on top if we would have had the V2, but we went under the 30, back over, under the third ATR channel, back over. If I were to have entered this position, I would probably use halfway of the washout bar, which is right about here. And that probably lines up pretty close to under the 30. So if you wanted to make it simple, I would hold it until we closed under the 30. If you have this position, if it keeps moving up, I would stay with it until it closes below the previous day's low. Johnny, hey buddy, how you doing? Yes, loving my cat today. You should love your cat every day, Johnny. Let's take a look at Caterpillar. Yes, sir. I'll bet you're loving your cat today. Like I said earlier, we tagged this third ATR channel here. Who knows? We might keep going up. I'm not sure, but the way I view trading, whenever we poke around the third ATR channel, I get a little suspect, but I really hope that keeps going up for you, Johnny. Sophomore Cirque Bun. Hey, how you doing? Thank you for coming by. Team looking good on daily. Let's take a look. Yeah, that's a really nice classic V1, right? Here's day one, day two, washes out day one, closes above day one's close. In addition, we tagged the third ATR channel and we went below the 100-day moving average and back over. So, this does look good. Look at the volume, a lot of strong volume to there today. Again, whenever you get into a position, where would your stop on this be? Well, it's a V1, right? Here's day one, here's day two washes out day one, closes above. Generally halfway of the washout bar, it should have some kind of Fibonacci support at the 50 fib level, and that lines up with the 100-day moving average. So, if I had this trade after this nice V1 rejection of the 100 and rejection of the third ATR channel, I would put my stop, I would use my stop at about 129.90 to have a close under there. That would tell me that I was wrong. And to the upside, you have to look and see where that 50 RSI is going to be, because you're probably going to run into some, theoretical resistance there at the 50, and the 50 right now lines right up here with the 50-day moving average too, and the 20. So this would be a tough one for me, because your risk is from here to here, your rewards theoretically from here to here. Could go higher, I don't know, but the way I would look at this is probably a 1-to-1 risk to reward ratio on this trade, the way that I look at. But this is a beautiful V1 for sure. Sompors, do you have this position? Let me know if you do. We can watch it. Murat, what is your first profit target on DDM is far from your entry? You always have equidistance profits from entry. Yes, that is true. Because every day, Murat, I will take the close 48.94, and I will add on what a 0.45 ATR is, 0.64. So tomorrow I'll add 48.94 and I'll add on 64 cents, and that will be my profit target for tomorrow. Then I'll take that profit target, add 64. That will be my second profit target. You see what I mean? So I always determine my profit targets by what the value of 0.45 ATR is. And that's why they're always equidistant, because like today, I will take the close, 48.94, add 64 cents onto it. That will be my profit target. I'll take that value, add 64 cents. That will be my second profit target. I'll take that value, add 64 cents, add it onto that. That will be my third profit target. So yes, good eye on that one. Murat says gold, the physical one, hit 1550 3 times and bounced back, and the momentum has gotten worse every time it bounced back. I think they did a lot of selling to retailers like me. Well, we talked about gold, and we talked about each higher high was running out of momentum, and 1550 is a key price on the spot price for sure. That's what a lot of the professional gold traders, that's the price they're looking at. So, what do you do here? Do you go ahead and short gold? I wouldn't. Like I said earlier, I'm looking for this to move sideways and look for a V1, V2 back up. Ideally, if it moved down, if it could reject the -1 ATR channel, then give us a valid V2, we might go up and test those highs. But generally, the first break, it's not a V. Yes, people can short up here. Once it gets down here, the people that shorted there are most likely looking to cover. They're going to buy. The dip buyers are going to come in to buy. Then you have two groups of buyers. Then you have an attempted rally. If it goes back to a new highs, then everybody holds their position. If it comes up here, attempts a new high, fails, then shorts will get on board, and the people that bought here will sell and get on board. Now you'll have two groups of buyers. So I certainly wouldn't be shorting gold here. I think there's groups of buyers are going to be coming in here. And so I'm actually going to look at this back to the upside. Frank says, would love your thoughts on TLT after pullback. Sold my position for a 10% gain. Oh, congratulations. So similar to what I just said on gold, here we make a high. Did we make a higher high there? Yeah, I guess we did. We made a higher high. We didn't quite have a proper double top with the bearish divergence, but we did run out of momentum. You can see how high the bars here compared to how high the bars are here. We did go down. We did go up. And technically, we did make a lower high. So this might have some room to the downside now. See what I mean? We make a high. We have a dip. We make a higher high. We have a dip. People bought this dip. It attempted to make another higher high, but it failed, went down. So now we have a lower high in place. So the people that bought this little dip here, when it failed, they got out. And probably you had shorts coming in, shorting here too. So we have a lower high, a lower low. We still have the 50 RSI underneath. I think it was a good place. I think it was a good place to get out, honestly, from a technical, because now we made a lower high and a lower low. But the way I look at this going forward, I'm still looking to see if this can stay within the 1 ATR channel, stop going down, show that some supply is dried up, and look for a stab down, a reversal on a V1 or a V2 to possibly go back up and test those highs. I don't trade TLT a lot, but we are back in the value zone. So I hope that helps, Frank. But congratulations on your 10%. Murat says, still keep 75% of my initial position at 37.25. Sold 25 of it at 42.40 about a week ago. I think the resistance will come at 47. If we break through 47, especially with momentum, then it'll be great. You're talking about Twitter, I think? Yeah. You sold 25%. Okay, so you're in at 37.25. So that's way down there. That's like down here. Nice job. Sold 25 at 42.40. Good. So you took some off. I think the resistance will come at 47. Well, let's look and see where we think the resistance is going to come. You know, it's hard to say now. I mean, on the daily, you know, I would probably have to look. Let's see. So you said 47. Yeah, probably somewhere between 47 and 48. That would be the extreme of the move up at the third ATR channel. Let's look at the weekly. So the all-time high is 48. Yeah, on the weekly, the third ATR channel is right about 47. And a lot of times, very difficult, guys. When you get a reading up to the third ATR channel on the weekly, that's generally about it. I mean, it was here, wasn't quite there, very close here, definitely was there. So yeah, I think you're right. I think 47 on the weekly is good. One thing you want to watch for, Murat, is, you know, now that we've broken out of this previous range here at 43.50, if we were to come back in this range, it would be a little concerning. But, you know, think about this, though. You know, you feel like the resistance is going to come in at 47. Well, it's at 45.30. So, you know, you have $1.70 to the upside potential if your theory's right. But you know, if you're wrong, you probably have more than that to the downside. So, you know, as you guys know, when things go my way, I like to take a little off. But, you know, let us know how you manage that trade, and I'll be watching it. Hey, Shalin, how you doing? Good to see you. Thank you for coming back, Etsy. You know what, guys? I forgot to buy Etsy. Damn it. I got all mixed up with Philip Morris there at the end of the day and Netflix, and I forgot to buy Etsy. Darn it. Oh, right here, you forgot to flag it. I did. I forgot to buy this. Dang. I was going to buy this with the V1 under 30, back over 30. Shoot. And the double bottom with the divergence. Here's the bottom, the rally, you can see the momentums here. Yes, you're 100% right, Sean. I forgot to buy it. Oh well. Oh well, that's how it goes sometimes. Dang. Man, I spent all that time talking about it, and then I got fixated there with Philip Morris and Netflix. Oh well. That's how it goes. But yes, I would have bought this here today. Shoot. Darn it. Oh well, that's how it goes. Thank you for pointing that out, Shalin. Appreciate it. Murat says, Greg, I mentioned to you about the trade which would hit my stop if it didn't wait until the closing price, which is something I learned from you. By today, that position is 34%. Fantastic. Let me read that again, Greg. I mentioned to you about the trade which would hit my stop if I didn't wait. Oh, right. You were going to get out, but you decided to wait for the closing price. And by waiting for the closing price, you stayed in the trade, and now that trade's up 34%. Fantastic. Well, I'm glad that piece of advice helped. And yeah, it goes back to, you know, the closing prices are the most important. You know, that is why I use the closing price to make my buying and selling decisions, everybody. Wow. Well, I'm thrilled to hear that. Frank says yes on first V1. Okay, that's where you bought, was on the EEL or OLLI, was with the first V1. Good. Brian, you have a good day. You have a good day as well, buddy. Appreciate you coming by. Gamer Squad, hey, how you doing? Good afternoon. Can you look at PFE? Yes, sir. Pfizer. Oops. Well, we did close above the 1 ATR channel, which was good. And you guys sometimes might be confused because it's a positive thing to close above the 1 ATR channel. But then you say, Greg, if it closes above the 1 ATR channel, you don't buy it. And this is true. This is the paradox. I like to buy in here, but if it closes above, that's a good sign. But once it closes above, it's too high to buy. You know, 2 days ago we had a high. Yesterday we went higher, closed under, but then today we closed back over that first day's high. That's why it painted this little triangle. That's a good sign. It's basically a V1 that immediately got rejected. So, I mean, I don't think I would buy it here. It's at a 48.84, so very likely we're going to run into some resistance at the 50. But I wouldn't buy it here, but it's, you know, we triggered this triangle, we triggered this fake out bar, and we're above the 1 ATR channel and the 20. So, you know, it looks pretty good, but from a trading perspective, I don't think it's a good setup, but it looks fairly good. Okay, so Sompors doesn't have team. All right. Johnny says, HBI had a couple of great days. I'll be holding it a while. Yeah. Looks pretty good. Rejected the, let's see. Yeah, it's looking pretty good. I don't know where you bought it, but we had this low, we had this rally, we made this equal to low. Oh, I think we talked about this the other day, right? Where we had this double bottom with no negative MACD bars showing it was running out of momentum. It's moved up pretty well. If I were in this trade, we took out a fractal over here, high with two lower highs to the left and right. If I was holding this trade, just, you know, the way I trade is that I'd be watching this 50 RSI pretty carefully. If we closed under the 50, if I were in the position, that would probably be my my exit. But, you know, I don't know what your trading plan is with it, but I hope it goes up. Sompor says, looking to get a call tomorrow, maybe. Okay. Murat, Greg, I think you should just look at here a few minutes before the market close. You sometimes forget things. You did with Baba. I know. That's a good suggestion, Murat. You know, on my end, I've got these screens, right? I'm looking at what you guys are saying. I'm looking at my accounts, and then I'm looking over at my charts. So sometimes it gets a little overwhelming to try to keep track of everything. I don't think I've missed any trades for a while, but I did miss Netflix. Or no, not Netflix, Etsy. I did miss Etsy, and I should have, because you guys pointed it out, but I wasn't looking there. Darn it. A lot of balls to juggle over here doing this, but yes, you're right. That's a good suggestion. Thank you. So, well, we did add Netflix though, so that's good. So, in the technology department, we have Amazon, nice profit. We do have the Qs, we had a good profit there, and a half of Netflix. So you know what? Actually, now that I look at this, I'm kind of, in a way, I'm kind of glad I didn't buy Etsy because of the correlation. But actually, honestly, I think, I guess they're about the same. No, actually, I think Netflix is better. I think Netflix is better with the bullish engulfing bar. Oh, with Baba. I remember back then when I didn't take the Baba trade. But I didn't take that because I forgot. I just took it because I was getting something else. I was looking at it here, back here on the 28th when we had that V1 back above the 200. Yeah, there's a lot of balls to juggle on this end doing this show. It's just because I have all these different screens and all the different charts, and so yeah, sometimes I miss it, that's for sure. Mert says, I think the risk to reward ratio is key. As you say, if it feels like the price will go up higher once it is above the ATR channel, but the risk to reward is low. To stay in the game, buy low risk, sell high risk. You're right. Have also been watching INMD for a possible buy. Let's take a look. INMD. Well, Frank, I can't really give you too much of my opinion on this one because it's a newer stock and I don't have there's not enough days to get proper indicators. I can tell you one thing, 8105 is a little high to buy in my opinion, for me, right? For my goals. But I honestly can't give you much opinion on this particular chart because it doesn't have enough days to have indicators. But if you buy up there, be careful because once people have those kind of profits, people could have their fingers on the trigger pretty quick if it starts going down. In my humble opinion, I would wait for a pullback before I bought this. But that's just my opinion. Sompors, VEEV. I like looking at these different stocks. Like I've never even heard of these things. So we had a V2 today. Here's day one. Day two did wash out day one, but not a lot. Better if it washes it out more by at least a quarter ATR, and we did close above. So it is a V2. It's a subpar V2, and we're at a 47.18 RSI. So what concerns me is we have the 50 right here above our heads. So yeah, I don't think I would take that one, Sompors, just because the RSI is 47 and you have these band of moving averages above you and a 50 RSI. So just my opinion. Frank said same here, Greg. Yeah, thank you. JT, I know the feeling. Had to close 5 trades at the open this morning. Oh. You did? How come you closed this morning, JT? Were they winners or losers? Anthony says, you're only human, my friend. I am definitely human, for sure. Frank says, IMMD was an IBD stock of the day. Oh, gotcha. Yeah, I mean, it might be an IMMD stock or an IBD stock, but it's it's an 81 RSI. It's pretty rarefied air. Doesn't mean it can't go. It doesn't mean it can't go up, but just my approach. It's a little too high to buy. I don't want to tell you what to do because the thing might go rocketing back up. But I'm just saying, if it were me, this prior resistance up here that now we broke through back. If it were me, I'd probably be looking for a pullback back to here if I really, really wanted to try to get into this stock, because this previous support should act as some kind of, this previous resistance should act as some kind of support back here. But it might keep going up, so you never know. Had a small gap at 144. It looks like a momentum is turning negative as well. Yeah, the signal lines underneath on the MACD, we did have a lot of selling coming in here. Remember when I said whenever you get a bar that's larger than 1 ATR that comes into the channel, this is like 2 ATRs, it usually comes down, touches the channel. There's another example. But yeah, this one concerns me. This one concerns me a little bit. JT says made money on all of them. Fantastic. Good for you, bud. Good for you. All right. Well, listen. It's 2:30. It's usually my out of here time, but if you have any other questions, please let me know. You got out of SPY. Good. You got out of Pfizer. Let's take a look. We know what SPY did. So you got out on a nice gap. Pfizer had a gap there as well. AGN. Nice. Oh, Roku. We had somebody on here yesterday. Very few people was his Skype name. And he had Roku. And he wasn't sure where he would have gotten out. I think I told him I would get out with the close under, but I think that's a good move, JT. I mean, that was a huge move. Nice trade, bud. And Beyond Meat. All right, so that one's down a little bit today. But if you got out at the morning, you got out higher than where it is today. So anyway, good trading, JT. Congratulations. All right. Well, listen, I am going to get out of here. Thank you, everybody, for coming by. JT, my friend, thank you. Congratulations on the trade. Murray, good hearing from you. Nice trading. Frank, thank you for coming by. Andy Rizzo, good to see you, my friend. Thank you very much. Johnny Norsworthy, good seeing you. You copied me on copied my Netflix. All right. Well, let's hope Netflix comes up. Thanks for coming by. Sampors, thank you for coming by, my friend. I think this was the first time you've been here, so appreciate it. Hope you come by again. Gamer Squad, thank you. Always great to see you. Always great to see you. Brian, thank you for coming by. Frank, I already mentioned Frank, but we'll mention him again because he's so great. Shalin, thanks for pointing out the Etsy trade that I missed. Dang it. I won't do that again. But thank you for pointing it out. It's good seeing you. Let's see. Max B, good seeing you. Steve Burns, thank you as always for coming by, buddy. It's always an honor. I know I always say that, but it really is the truth. Shelton Johnson, thank you for coming by today. It's good to see you again. Anthony Rizzo, and I think that's it. So, all right. Well, listen, go out, do something nice for somebody today. Hold the door open, give them a smile. Just be nice, right? We need more of that in this world. And grateful we had a good day today. It'll be interesting to see if we have any follow through tomorrow, what happens. But, oh, there's very few. Very few people. That's right. I was just talking about you on Roku, about the Roku trade. So, all right. Hope to see you guys tomorrow, last hour of the market, and have a great rest of your day. And if you have any questions, feel free. You can email them to me if you had a question you forgot about and didn't ask today. All right. Take care, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.